18th of July, South Africa marked President Nelson Mandela's life and contribution to our country by making a positive difference in our corner of the world. Now, this year's Mandela Day took place in the aftermath of violent unrest in some parts of South Africa. And for many, the need to make a positive difference became extremely acute during this time. One way to make a positive impact can be through your investment choices. So what options are there for those interested in sustainable investing? So before I just get started on that, I think while we're still logging in, I just want to do a quick poll so I can see who's my audience. I always find it interesting when I do little polls. Yeah, so my first one there is, would you consider ethical investments? Or would you rather, when you talk about investment, you consider profits? Just type in a yes or no, and we'll take it from there. Okay, so there we go, launched it. So just tell me, of the people that are on here right now, would you consider ethical investment? 100% yes so far. Okay. So far 90%, 91% of you say yes, you'll consider it, not any profits. Okay, we're getting there. Okay, so about 70% of you have voted so far. So it's about 80-20 again. Interesting. 80% of you say yes, you'll consider it, and 20% of you say no, it's for profits only. Okay, great, cool. Thank you very much. Okay, so the whole idea here is investors around the world are increasingly focusing on investing in a responsible manner by accounting for environmental, social, and corporate governance aspects alongside financial performance. We are seeing a strong trend towards investors wanting to know that the investments are making a positive impact in the world with ethical and socially responsible investing. So today we're going to explore how to invest for a positive impact. Now, I like to call it what we call responsible investing. So here's the agenda for today. We'll just move on to the next slide. But the idea here is that some of you might have heard of it. Sorry, before I get going, those of you that don't know me, my name is Sean van den Berg. I'm an investment specialist at PSG Wealth. Okay, so just to get started off, I'm going to use the word shareholder activism. Some of you might have heard of it, but basically shareholder activism is a prominent or a prevalent responsible investment strategy that is gradually gaining traction among South African investors. So all it is, it's just a way of influencing companies' behavior by exercising their rights as a partial owner, as a shareholder. So there are different, obviously this class of activism attempts to gain control of the company and replace management or force a major company change. So that's what we've seen in the past with what we call shareholder activism. So here in South Africa, obviously we've had a well-developed framework of responsible for investors. The institutions, the pension fund guys and the unit trust guys, they have considerable power to influence the practices and policies of the investing companies they're involved in. And later on in the presentation, I'll be talking about PSG Asset Management themselves and how they have influenced some of the things in the market. So traditionally, the activist shareholders focused mainly on governance and financial performance, but they also might have sound ideas that management may or may not want to use. But basically, the idea is that the company's assets can be used better. They can improve their operations. They can also obviously enhance shareholder value. So the whole idea about activism is about driving change. So, oops, wrong way. What is the difference? To kick the presentation off, what's the difference between ethical and sustainable investing? I must say, when I was doing my research for this presentation, I came across quite a few different ways of looking at this, and we'll discuss it a bit later. But launched in 1984, the UK's first ever ethical investment product was called the FNC Stewardship Growth Fund, and was nicknamed, by the way, the Brazil Fund, owing to the fund manager's consensus that you have to be nuts, in other words, Brazil nuts, to be invested in it. Okay, So fast forward to today, and ethical investing is not only relatively mainstream, it has been shown that it outperforms some conventional market indices. So the growing popularity inevitably means more choice for consumers. So what does ethical investing mean anyway? So if you look at this here, I'll do a quick comparison. Um, ethical investing refers to, as the name implies, investing using ethical principles as a guidance or as a guideline. Ethical investing refers to the practice of using one's ethical principles as a primary filter. So basically, it depends on the investor's views. Historically, we always focused on moral and ethical judgments, especially when it came to things like, be it the environmental, the political, or religious views and such. So we think of the Sharia funds and the Muslim way of investing. But all it is, it's just a way as a means of filtering out certain types of companies and sectors. We refer to them as sin stocks. We talk about the tobacco companies, we talk about the gambling companies and alcohol companies. Those are the ones that come to mind straight away. But one type of tax or duty that is paid by these companies is what we call a excise tax. It's more inappropriately known as a sin tax. Obviously, it's a tax that or duty imposed on items that cause harm to people, such as alcohol, tobacco, even sugar and fuel. Okay, so those are what we call the ethical side of the investing. So another aspect of ethical investment to be aware of is that investors may not necessarily be choosing a company based on investment performance. That's why the question was right in the beginning about my little poll there. I see all the questions in here. So we had 67% yes, sorry, 87% yes, and 30% said no. So they all would consider ethical investing. So sustainable investing could mean a lot of things to different people. Basically, under the broad heading would be doing well by doing good. That is what sustainable investing would mean. It also historically always referred to the environment and energy resources. It's synonymous with going green, reducing your carbon footprint and those kind of things. But sustainability is an umbrella term, and we will talk about it in a slide or so time. We talk about 5 different ways of looking at this. But it's an umbrella term that encompasses a company's efforts to reduce its impact on the world around it. So other related but distinct terms would be corporate responsibility. We've all heard of that before. We've also heard of the term called the triple bottom line, or the 3 Ps, being profit, people, and planet. Okay, so that's just a quick introduction to it. But a popular term, which is becoming more popular now, encompasses sustainable investing, is ESG, which stands for, it's an acronym that stands for environmental, social, and governance. Now, companies that employ an ESG focus, I'll mention just now, it would be, for example, PSG Asset Management. They're looking for at sustainability from all sides. And as a share investor, we'll be touching on that too, is to incorporate that into your investment philosophy. So all it is that means different things to different companies, but the main thing is about ESG investing is a specific set of criteria that a company can measure and report against. And that's what's important. We'll touch on it again just now. Okay, so here's five ways of looking at it. We talk about, I mentioned just now, I talked about ethical investing. So obviously the focus here is what we call negative screening. As I mentioned just now, avoid the bad stuff, the sin stocks like the tobacco, the alcohol, and the gambling. So it's just focusing on call it a variety of other activities too. So the screening process, as I say, negative screening process, would avoid companies that are heavily involved in deforestation, for example, or intensive farming, genetic engineering, or companies operating under oppressive regimes, or in countries with low human rights or low labor standards. Okay, so that's what we call negative screening, avoiding those kind of companies. In other words, it's what they call exclusion policies. They'll have exclusion policies, and it will vary from fund manager to fund manager. Some activities are fully screened out, or others are assessed on a case-by-case basis. And I'll touch on some case studies a bit late in the presentation. But there are many factors that can be considered, including what percentage of the company's profits come from harmful activities, okay, and what's the company doing to shift the focus to more principled activities. As I mentioned just now, we'll be touching on some of those case studies. So that's what we call ethical investing, and the process that would use to screen out the stocks. Talk about ESG investing. So yeah, the fund manager would use a more complex scoring process to identify what we call best of breed companies. You can look at it as a positive screening process. So it ensures that investors' money is supported by companies with the highest standard of practice. And we'll be looking at some examples here. The third one we call SRI, or the social responsible investing. This aims to generate a positive social outcome through investment. So again, this is more of a blend. We first screen out the sin stocks, and then we apply the ESG process. So it's, as I say, it's a blend between positive and negative screening. And the idea is again to capture the best of both worlds. Okay. So impact investing. Yeah, we talk about focusing on the outcome or the impact of the company's work on the planet and on its people, or on people. So impact investing funds would look at things like well, they'll be happy to hold companies that are potentially involved with more controversial activities. For example, companies producing genetically modified foods or GM foods, provided those companies can demonstrate they are taking positive steps to adopt a greener, more sustainable approach. And we'll, as I say, we'll look at some examples just now. Sustainable investing, the last one we're looking at here, basically is a broad approach to ethical investing. Encompasses all the elements or the other forms of ethical investing. So what I mean by that is they include negative and positive screening, as well as obviously the focus and the focus on the output and impact of companies' operations on its environment. So it's a bit of everything. It's probably the most popular approach with today's socially conscious investor. So bottom line, before we do another poll, whatever ethical investment funds means to you these days, there's a broad range of options available. And I must say, when I was doing this research, it's not easy to find a lot of information yet on South African companies. So I must just warn you that. But it's a responsible way to avoid activities or companies that are detrimental to society and obviously the planet we live in. So I'm going to do another little poll. And this one here is that, have any of you considered any of these investment approaches? Okay, have you considered any of these 5 approaches in your investment philosophy? Okay, that's quite interesting. Majority have not. You consider ethical investing, but not these different approaches. Interesting. Now we're 50-50. Cool. Well, let's go on a bit more, and then I'll carry on. Okay, guys, I really appreciate your participation in these quick little polls as such. Okay, so what does ESG mean, and how do you determine it as such? Again, as I say, there's not a lot of information available in South Africa. I must say there's a lot of stuff available for overseas. Okay, so yeah, so the poll looks like it's finished. Thank you. So 56% of you said no, they have not incorporated any of these 5 different factors, and 44% said yes, you have considered. So majority is they have not. Okay, guys, thank you very much for participating. Appreciate it. Thanks a lot. Cool. So let's move on to the next, as I say, move on. So what does ESG mean? Okay, environmental, social, and corporate governance, or ESG matters, they tend to come to the fore during times of crisis. Interesting, eh? So, such as the 2008 global financial crisis, and as we're having right now, the COVID-19 pandemic. The 2008 crisis was a catalyst that considerably fueled the responsible investment movement that aims to bring social responsibility to the asset management sector. Interesting. So we see now in South Africa, we have pro ESG initiatives. We call that, we have what they call the King Reports on corporate governance. That's been around for a long time. I think there's 3 or 4 reports there. We have Regulation 28. Those of you who have retirement annuities and pension funds know about that Regulation 28. And we also have what we call the Code of Responsible Investing in South Africa. So in recent years, obviously, younger investors have shown an interest in putting the money where the values are. So let's talk about ESG. We touched on it just now. Slide is sticking. There we go. What does it mean? As I say, it's a specific, ESG is specific and measurable. As I mentioned just now, ESG obviously is environmental, social, and governance matters. That's what it stands for. It's as I say, it's more specific and more data driven. It helps, it helps investors avoid companies that might pose a greater financial risk, and that is bottom line. I think what's important about this whole presentation: avoid companies that might pose a greater financial risk due to the environmental and other practices. And I'll highlight that when we touch on our case studies. So it's used to identify companies with superior risk-adjusted returns. Yeah. So it helps investors find companies with values that match your own. That's another bonus to that. So we talk about all these different criteria just now, but the environmental criteria considers how a company performs, obviously, as a steward of nature. Social criteria, very interesting. It's your relationship with your employees, your suppliers, your customers, and the community that you operate in. Then governance, in the past that was always important. I mean, more important now. We've seen what's happened with Steinhoff, and we've seen what happened with Tongard, all those kind of things. That comes back to the company's leadership. We're talking about internal controls and things like that. Let's go to each one of these individually. Environmental criteria. Yeah, we're talking about how the company uses, the company's use of waste, pollution, natural resources, conservation and treatment of animals and things like that. So first thing that comes to my mind always when I look at this is, especially when we talk about management of toxins, is the mining industry. You talk about cyanide water, what they're doing with that water, how they treat that water. So that's quite interesting. And you'll see a slide just now where there was 1 or 2 mining companies that do come up as ESG companies. Interesting. What's also important is, in the news right now is Tiger Brands. And we know in the past with Tiger Brands, with the whole Poloni story, of the listeriosis, those kind of things does affect the company. And we saw the Tiger Brands, and there's still an ongoing case for that. Okay, so environmental, it's more closely linked to what we think is sustainability. There's a lot of other questions involved there, but bottom line, if you look at the case study, we talk about Glencore, and this is from what I got from PSG Asset Management. Now, Glencore is a mining company. They've got a poor history of ESG in the past, but there's moves to a more positive future. Obviously, they're moving towards what we call green products. But just to put you in the light here, ESG, Glencore's ESG issues were very clear. They had a lot of allegations of corruption in various geographies, like in Nigeria and DRC and Venezuela. And obviously, there's related ongoing investigations in all those jurisdictions. They also had investigation to accounting irregularities. They've also had, obviously, a big part of their business was the thermal coal side of the business, which is a significant revenue and profit driver. So what's happening now with ESG, as I say, the record was so poor that many investors, call it fund managers, and that were actually avoiding them. They were downweighting Glencore or negatively screening the share. In other words, making the share what's called uninvestable. But this combined with the potential fines that Glencore was facing, obviously caused the share price to fall. But from PSG Asset Management point of view, they were looking forward to, and they saw some credible commitments to improve the ESG across the business. Now remember, the asset management team, they have a group of analysts. They go sit down with the management. They have a one-on-one with the management teams. So back in July 2018, Glencore's board, they established an independent investigation into the corruption. And there's clear evidence now, obviously, of governance progress and obviously improvement. There was a change in the CEO, and a lot of the senior management were changed following, obviously, these allegations. Also, what's important is they've become more responsible in their approach to thermal coal. They're running it down to about 40% and increasing the other parts of the businesses, the commodity mix and such, be it copper, nickel, and cobalt. And the whole idea there is to obviously achieve what they call a global decarbonization. What I also found interesting with Glencore's management, they actually bought out the partners in what I hope I pronounced the company right, Surajon, as a preferred option to selling to less irresponsible investors. That was quite interesting. So I'd rather buy them out than having to have a reputational risk. And then obviously being a company involved with thermal coal, they're very much involved with the Paris Agreement, climate change, they're aligned with that strategy. So that was quite interesting with that whole thing. So from PSG's asset management point of view, they raised their concerns along with other investors with the management on several occasions, as I said, on one-on-one with the chairman back in December 2020. And they were seeing the desired response and progress. So that's what they're considering. They have this year on their watch list. So they anticipate that Glencore's ESG risk premium could narrow in future, and the green relevance of its products could gain a favorable perception. So those are the kind of things that we as investors, as small private investors, don't really consider sometimes, is to look at these kind of things. By the way, when you look at all these companies, not only look at the financials now, you'll see that on their website, a lot of these companies' website, I saw it on Sasol's website, there's a whole sustainability section where they go into more detail what their plans are and things like that. Okay, so let's talk about social criteria. Yeah, looking at it, as I mentioned just now, the company's business relationships. How does the company impact its employees, customers, and community? And they're looking at a lot of different things, workplace safety, diversity and inclusion, customer satisfaction, a whole lot of things. So in this scenario, I want to highlight Philip Morris, which is a tobacco company, which is quite interesting. In the same stroke, you can also say BAT, British American Tobacco. So, what I liked about this case study, obviously all of us can relate to it. The first thing that comes to mind, being a tobacco company, evidence indicates that the company's product, obviously cigarettes, when used there as intended, kills approximately 1 million people per annum. Now, I went onto BAT's website and they have a full lot of information about the harmful effects of their products. Quite interesting. Okay, so they disclosure, they're not hiding from the fact. So it's very interesting. What's important, what they're doing about it. So there's this move to what they call genuine commitment to transition combustible, they call it combustible users to potentially lower risk. And this is what they call NGPs, or next generation products. We call them e-cigarettes and those kind of things. There's a move towards that. But the long-term health effects, obviously, of NGPs and the split of transitioned and new GP users should be monitored going forward. Interesting to note, this I got off GP's BAT's website. They're the most diverse NGP portfolio of all the large tobacco companies in the world. Interesting, eh? So all the tobacco companies, obviously the NGP, they're probably linked to these harm reduction strategies, and that's what they're doing. So that's from a social aspect. They're actually educating people about the harmful or the unhealthy effects of their products. Okay. And then lastly, let's look at quickly governance criteria. We mentioned before the King report and things like that. But historically, we looked at how a company uses accurate and transparent accounting methods, and obviously our shareholders can vote in important issues. right in the beginning, I spoke about shareholder activism. In the past, this was always focused just on governance. So it's business leadership and its structure, but there's a lot of other things that we look at. So in this context, we talk about the case study. Interesting that I'm going to bring up the JSE in this situation. This is JSE Limited, the actual share. And in PSG Asset Management, they actually voted against inappropriate director appointment. This was a reappointment of Ms. Fatima Daniels as group audit member. This is prior to the AGM in June 2020. PSG Asset Management, the team met with the JSE Investor Relations team and obviously the company secretary. They wanted to discuss various concerns, and obviously Ms. Daniels was part of that. Ms. Daniels, the reason why they did that was Ms. Daniels was a director on Tongaat as sugar, and obviously we know what happened there. There was this whole lot of weak governance that enabled multiple categories of financial misstatement happening there. She was also on the board for a substantial period of time. Obviously knew what was going on there. And bottom line, Tongaat's board saw massive destruction of shareholder value. And as a director, your key role is obviously to oversee the executives, and they clearly failed in that scenario. So bottom line is that Ms. Daniels, she sits on 6 boards, multiple boards, and she has her own consulting businesses, and obviously cannot potentially give all the roles due attention rather. So PSG Asset Management, their view was that they could not endorse Ms. Fatima's appointment in such a key and sensitive committee decision. And this was conveyed back to the JSE Limited, to the JSE itself, and to vote against this appointment. So the bottom line, the outcome was that 78% of shareholders approved the appointment. But Ms. Daniels actually stepped down a month later, July 2020. So this shows you what happens behind the scene that most investors are not aware of. Okay, so let's talk about ESG companies listed on the market. So I was bringing quickly the investment philosophy of PSG Asset Management. You know, they have 3 guiding principles that they use, what we call the PSG Asset Management way. First of all, they take a long-term approach. So as an investor, you yourself should have a long-term approach. Okay, so if they find a security or share that meets their hurdle rates, and the hurdle rate, by the way, just means that it's a minimum rate of return required for a investment. Okay, it's a minimum criteria to be invested in. So it gives companies insight into whether they should pursue a specific project. That's what a hurdle rate means. But if they find a company that meets that criteria, obviously they deploy the client's assets into those securities to appreciate towards fair value. If they do not find securities that meet their hurdle rate, they sit on the cash and wait for the market to present more attractive opportunities. So that's number 1. They have a long-term view. Number 2, they are prudent. Okay, so they're cautious when they invest. They only buy securities they think they have sufficient margin of safety. So those of you who look at fundamentals, we look at value investing, we talk about margin of safety. Okay, you're looking for undervalued companies. And then thirdly, they're looking for companies that have a strong culture. They have a strong culture of research, and they always do their own homework. And this is all applies to you as a small private investor. Do your own homework, do your research. Okay. You want to ask yourself, you want to ask rather the right questions to get obviously the odds in your favor. So that's the approach here. Okay. So we talk about PSG Asset Management, the process. We talk about the 3 M's. Let me just get my cursor here quickly. Oops, wrong one. I don't want that. Here's my spotlight. So if you can see here, we've got the moat, we've got management. So these work together. You can see that little dotted line. These work together, and that helps in the quality assessment of the company. Okay, and then we talk about margin of safety. This refers to the price. Okay, so I understand that when you talk about the three M's. Okay, moat, management, and margin of safety. Cool. Let me just bring that back. So, in this sense here, quality is the evidence of sustainable competitive advantage. That's the moat. Imagine a castle with that moat around it. That's your competitive advantage. And then strength, obviously, of management, very, very important. So price or marginal safety is how the security is trading relative to its fair value. Okay. So what's important, and this is we're going forward now with all the PSG single management funds, they use this approach with every security they invest in. Okay, so just quickly the approach to ESG. Okay, this is a high level overview. So they look at all the material aspects. Okay, we mentioned this now, and there's a whole lot of questions they're going through. But I'm just going to go into it. I just want to show you how these guys would do it. So there's an initial high level view, and from there they dig a bit deeper to get an understanding of the ESG factors, and then they take away what's important to understand from that thing. Okay, but just understand that bottom line, this is not an add-on. They do it all together. So the focus is on issues. This is not a tick box. Oh, yes. They actually go deeper and find out about the company. So the focus, as I say, is on the future or the potential long-term impact of the company. So this is what I found interesting, this second level of thinking, to understand the market's view of the company and then potentially what is priced in. Okay, so anticipating a whole lot of different factors. What could change, why and where these changes are credible. Okay, referring back to my case study. So the whole line here, it's a pragmatic and a balanced approach to investing. Okay, this is how they would integrate this into their investment approach. Okay, so it's not an add-on or independent process. It's integrated. So when you're doing your own analysis, be aware of this when you're talking about the companies, the nature of the business, what do they do, and then go look at the sustainability report. Look for the risks. That's what you're trying to do here. Okay. So so to highlight for you, and this is, as I mentioned just now, it's difficult to find companies specifically or to highlight ESG companies. So I came across this, what they call the MSCI South Africa Leaders Index. Okay, obviously based in US dollars, but this one is the highlight. This is the top 10 constituents, and you can see the list here. And interesting to see that 50% or 5 of these companies are financial companies. Okay, so we've got First Rand, we've got Standard Bank, we've got Capitec, we've got Sanlam, and obviously we've got Absa Group. So you can see there, financial companies. And then, as I mentioned earlier, they got Impala Platinum, which was quite interesting to be on this list. And then we also got Goldfields. Okay, so as a starting point, those are the kind of companies that you want to look at from an ESG point of view. It's rated quite highly. You can see what kind of percentage they have in the weighting in the specific index. Okay, go one step further. You might want to look at things like ETFs. Now, on the JSE itself, there's only two ETFs that would be skewed towards ESG. First of all, we've got the Satrix MSCI World ESG Enhanced ETF. Okay, and again, you can see very, very quickly here, the majority of these funds here, it's Apple and Microsoft and that, so a very a large percentage of this ETF, the underlying constituents, are IT companies. So if you want exposure to those kind of companies, and also having exposure to ESG, okay, remember it's also in dollar terms, you're having an advantage there too. So that's the first one, the ESG enhanced ETF, as I say, Satrix. And then you got the emerging markets. The first one was developed markets. There were 23 countries involved there. It was different funds. By the way, the MSCI World ESG Enhanced Focused Index holds 1,490. This fund feeds through to that fund, and this one holds 1,317 funds, ESG. Okay, so the emerging markets one, by the way, going back to the previous one, it's obviously 2/3 of the index is this one here. 2/3 of the index is was skewed towards American stocks or the IT companies. So 2/3, 60% is towards the IT companies. This one here, the emerging markets one, is about 40% Chinese. Okay, so you'll have exposure to companies like Alibaba, Tencent, Taiwan Semiconductor Manufacturing, Samsung, and things like that. These graphs, by the way, I took them this morning, so they're quite up to date. You can see the performance. Again, now this one has a heavy weighting towards financials. Okay, but those are the ways you would have exposure to ESG stocks through the PSG management, single management companies, and obviously the other funds too. I'm just highlighting the PSG ones because I know the process they use there. There's those list of shares, that's the second option. And then the third one is the ETFs. Okay. So guys, I know I've gone over time a bit. Okay, so in quick summary, so as investors, how do we move beyond our biases with the aim of owning weatherproof investment portfolios? Bottom line, the answer lies in our research. We need to research, we need to debate, we need to remain true to a tried and tested process, investment process. So this is just adding another spanner, another quiver to your, another arrow to your quiver rather, in your investment approach, to consider these things, the ESG approach to investing. So there's no substitute for rigor. When I say rigor, means thoroughness or consistency. That's rigor and analysis. All you have to do is obviously apply what we learned here, and you'll create a more robust overall investment strategy for the long term. So just in summary, before we handle the questions, ethical investment processes, focus more on the moral and ethical judgments. And say some of you might not be interested in this and it doesn't concern you, that's fine. But I, from my side, I would insert the ESG approach into my investment philosophy going forward. I think it's just more prudent. And I suggested those are the 4 different ways to get involved there. PSG Asset Management or single manager funds, and obviously there's others. It's just difficult to find them. Selected shares, you'll have to go look at each individual company, look at their sustainability criteria and things like that. And then those 2 ETFs. Okay, so let's see what questions you guys have before we end up here quickly. Cool. Okay. Okay. Where would I get a list of ESG funds? John, that's a part I find very difficult. I couldn't find a list of ESG shares in South Africa. The closest I came was that MSCI index. So difficult, but obviously as it becomes more and more popular, I think it'll be more people demanding or looking for that list. But it's a starting point, what I've got here now. Okay. So doesn't look like there's any other questions. Guys, from my side, as I say, thank you very much for being on this webinar. I'm sorry gone over time. In conclusion, those of you that don't have unit trust or want to have exposure to the PSG funds, maybe go do some research on our website, go click on this little link here to take you more into give you more information about the PSG funds. Those of you who want to go direct, if you haven't got a share trading account with us yet, there's a way to look at some more information on that. But from my side, as I say, the recording should be sent out by Friday, as well as the PDF. Any questions you guys have, please send me an email on wealth@psg.co.za. You can also contact us on OneStream 0860 000 368. But from my side, thank you very much for being on this webinar. Until next month, bye for now.